Good afternoon, everyone, and welcome to Recent Changes, Amendments, Disclosures, and Reporting Requirements webinar in Form 3CD for Assessment Year 25-26 and precautions to be taken while uploading of Tax Audit Report organized by Direct Tax Committee of ICAI. We have with us the Chairman of Direct Tax Committee, CA Piyush Chhajet sir. To introduce him, he brings 25 years of experience, extensive expertise as a senior partner at Messrs. Chhajet and Doshi Chartered Accountants, a distinguished chartered accountancy firm located in Mumbai. His educational background boasts a bachelor's degree in commerce from Narsee Munji College of Commerce and Economics, Mumbai. He also holds a diploma in information systems audit. This rich educational foundations has equipped him with the knowledge and expertise to excel in the intricate realm of finance and taxation. He is an expert in tax litigations and advisory. CAPU Chhajet has made significant contributions to the finance and accountancy landscape on both national and international levels. Notably, he was a member of Central Council for the Institute of Chartered Accountants of India from 22 to 25 and for the second term in 25 to 29. Within the ICI, he has served all the three pivotal standing committees, executive, examination, and finance, showcasing his multifaceted understanding in the profession. He is currently a chairman of Direct Tax Committee and vice chairman of Expert Advisory Committee. He was a member of Working Committee for the Asian Federation of Accountants. He is currently technical advisor on International Auditing and Assurance Boards and member of committee to study fiscal rents and other statutory requirements of businesses SAARC countries of South Asian Federation of Accountants. He is on board of Wimplast Limited, Cello World and Multibase Limited. With this brief introduction, we welcome him. Now I request CAPU Chhajet, Central Council member, for his welcome address.
Thank you very much, Ronak, uh, for introduction and first of all, agreeing for being a moderator. My vice chairman, CA Vishnu Agarwal ji, and faculty speaker, I would say CA Avinash Ravani. And I will not limit him to as a speaker because he has been always available to Direct Tax Committee. And since I have been associated with the Central Council and Direct Tax Committee last 3 years, I've been seeing him concurrently working for the publications, most important publications of Direct Tax Committee, being guidance note on tax audit. In fact, last month he's a part of the group. And in fact, all the members, first of all, good afternoon to all of you. And I'm addressing this webinars, which is happening on every Thursday, almost after 4 weeks. And my very able vice chairman, who is also an expert of Direct Tax Committee, who was holding the guard, and because of whose efforts these webinars are continuing on every week on week. In fact, I was on holiday during that period of time. And in last 1 month, a lot of developments has taken place under the leadership of Vice Chairman C. Vishnu Agarwalji, wherein the revision of guidance note for which the groups were formed, they have almost completed their drafts, and those drafts have been approved by each group members, and they have already been received by the Direct Tax Committee also, and it would be placed for the approval of the council in the ensuing meeting on 30th. So thank you very much. So I appreciate the efforts of Vice Chairman C. Vishnu Agarwalji in this in last 25 days. He's steadily working on this with all the group members, including Avinashji was there. So obviously, and a lot of other members, my secretariat team, who is also working on this, who are supporting the vice chairmanship, vice chairman, and all the other group members. And I believe our target of issuing the revised guidance note, incorporating all the changes which have been made in Form 3CD. You may recollect that the guidance note was last revised in 2023, and hereafter in 2024, we came with an implementation guide to cover up the revision in Form 3CD, which happened in 2024, specifically covering certain amendments relating to Clause 22, that is 43B subclause H. But as you all know, that implementation guide issued by the institute is in recommendatory nature, whereas the guidance note are at higher pedestal because guidance note is approved by the council and before after exposure draft is required, public comments are taken. Though for the implementation guide also we followed that process, but generally it's an guidance implementation guide and not very mandatory. Whereas guidance note is to be followed, members are expected to follow, and if you are not following, you need to document that why you have not followed, what are the alternate audit procedures which you have applied. So please do keep in mind. Please look forward to the new revised guidance note, which will cover all the revisions in Form 3CD. And I believe before this guidance note is coming in, today I'm sure Avinashji will touch up a lot of amendments. That's what his area is, and he's aware how what views have been taken by the group members to address those new clauses or the revision in the clauses which will be coming in the guidance note. So beforehand, before the publication actually comes, I am sure Avinashji will definitely. So, giving that background, I thought, apart from that, the Direct Tax Committee, again, we are from groups under the leadership of Vice Chairmanship. We are working on the checklist for the income tax returns. Of course, the star ideas have come, but the utility has not been come. I am receiving a lot of queries from the members, lot of telephone calls. Yeah, Piyush bhai, ITR kab aayega? And whether the due date of the audit is going to be extended or not. Obviously, I am being told that there is some working going on as far as upgradation of system is going on, and therefore it's taking time as far as utility is concerned. I know we are already in month of end of month of June, and maybe another week or 2 weeks, maybe that you may not receive ITR. So question may arise, a difficulty may arise to the members. What will happen to tax audit? Because the income tax return filing date itself is extended to 15 September, and the members may not find time. Obviously, there's we have not approached, we have not spoken on this that what will happen to tax audit road, but I believe that better sense will prevail, and CBDT is appraised of the matter, and they are also well aware that when the income tax returns are itself going to be filed on 15th of September, leaving only 15 days for the tax audit returns, or I would say tax audit filing, because returns would be in October. I'm sure they themselves may take cognizance of this. Or as and when time goes away, we will also consider at the direct tax committee level whether we should also make an adequate representation. But I believe without representation itself, they should do that. And if they do that, I think so that would be a more ideal situation rather we representing on this particular things, because they themselves are not ready with it. So that's an idea. So, with this background, I thought I'll just convey you. Last, before I hand over to back to Ronak, and then obviously Vice Chairman would be addressing. Uh, Income tax bill, a lot of outreach programs the committee has been doing, and in last 2 months more than 30 programs we have done. Last 1 month I would say 30 programs, and we are continuing to do such programs. The idea of this income tax bill outreach programs which have been done at branches level is to appraise the members that what is in store in this income tax bill, and also to give the details about what went into this income tax bill. As you all know, if you have heard me earlier also, that institute this time was engaged with the CBDT and the lawmakers, including Secretary, Ministry of Revenue, Ministry of Finance, since September 2024. And we had given our broad suggestions. I would say why broad? In fact, detailed suggestions in regard to comprehensive review of the income tax in the month of October 2024 itself. And a lot of them have been considered by way of reducing obsolete sections, removing certain provisions and explanations, so they would have been converted into subclauses. But obviously, even after that, after the bill was introduced, we were the first institute to be called by the select committee of Lok Sabha, wherein myself, Vice Chairman, was also present, and other council members. We presented and gave our suggestions on income tax bill. And thereafter, that was as early as 6th March 2025. And thereafter, at their request, we gave our clause by clause suggestions also, containing the 4 volumes on 21st of April, which I believe was also given by a select committee to the CBDT, and we had also sent it to the CBDT. CBDT has tried to respond them before the select committee as far as our suggestions is concerned. But the way I know today, the way it stands is that this income tax bill would be presented on 10th of July when the monsoon session of the Lok Sabha opens up. So during that session, somewhere this select committee should give their report. And the way I know that the idea of this income tax bill is to bring a new act with a concise language, simplification of language, which can reduce litigations. They are not doing any policy changes as of now. because their understanding is that if I need to change any policy, if I need to make any substantial changes in which impacts tax calculations or tax exemptions or whatever, we'll do it through a finance act. So if you ask me very personally, individually, I think so. If this gets cleared in monsoon session, then obviously again it would be open for certain public comments, and somewhere before winter session or budget, it may be passed, and in budget it may be implementation may be decided from 1st April 2026. So keeping that in mind, if the monsoon session passes this, then we will further aggressively try to reach out to each and every members through further outreach programs, try to educate our members through these webinars and maybe physical programs. So I thought I will just give you a brief of what's happening. And once again, I welcome you all. And I'm sure today's session, when Avinash is speaking on the important amendments in 3CD, and I think so ITR also, he would be covering to a certain extent. And believe me, if you have any questions, you please do put it. I'm sure Avinash ji will handle that, irrespective of what topic he is speaking on. He will definitely do that. So, with this, happy learning to you. Thank you very much. Over to you, Ronak.
Thank you, sir, for your words. We also have with us Vice Chairman of Direct Tax Committee, CA Vishnu Agrawal ji. He is a Central Council member for the term 25 to 29. He currently serves as the Vice Chairman of CPE Committee and Direct Tax Committee of ICAI. Additionally, he is an esteemed member of several key committees, including Standing Committee, Executive Committee, Management Committee, and Finance Committee of ICAI. Vishnu Agrawal ji is a chartered accountant with over 2 decades of experience and specializes in income tax matters with extensive expertise in search and survey proceedings, Benami and black money proceedings, ITED proceedings, and income tax litigation. As a renowned speaker and author, he has delivered numerous lectures on direct taxes and litigation matters across various platforms. He has also authored the book Landmark Judgments of Income Tax, which serves as a valuable reference for tax professionals. If we talk about his leadership and contributions, he is a former chairman WRC of ICI for the term 17-18. He served 3 consecutive terms 2010 to 2019 as a regional council member of WIRC of ICI. He represented WIRC of ICI before various government authorities. Beyond his professional commitments, C. A. Vishnu Agrawalji is actively involved in social service and community initiatives. With this brief introduction, we welcome him. I now request C. A. Vishnu Kumar Agrawalji for his opening remarks.
Thank you, Ronak. Respected our own speaker, C. Avinash Ravani ji, the moderator for the Anand branch, Chairman Ronak Goyal, and our Chairman of the Direct Tax Committee, Piyush Chajid ji, and our Secretary Priya ji. I thanks to Avinash Ravani ji for accepting our invitation to addressing across the country our members, friends. Our main aim of this committee to reach out each and every member, last member corner of the India, that each and every member can gain the professional opportunities and professional knowledge through this webinar. Friends, today also more than 2,000 members are attending this particular webinar. And Avinaji is the key instrument for drafting our guidance note and the checklist for the ITR also. Friends, Avinaji is always available for the Direct Tax Committee. And our chairman, Piyush Hajirji, has given me the free hand to draft the revised guidance note 44AB and the checklist for the ITR, and also organizing this webinar. So I thanks to my chairman also, Piyush Hajirji, for giving me the free hand for revising the guidance note of 44AB and checklist and the organizing all the webinars across the year. Friends, I will not take much of the time because more than 2,000 our members are eager to hear Avinash Ravani ji for this particular topic because it is a very important topic and our tax audit might be start with the next of the month. So I thanks to each of every my member also, moderator Ronak ji and our Avinash Ravani ji for today's session. Thank you very much, Ronak.
Thank you, sir, for your
So
words. This session, we have with us C. Avinash Ravani. He is a BCom, FCA, and DISA. He is a member of ICI since May 1993. He's in the field of direct tax audits and company law matters. He has delivered various lectures at study circles of WIRC, SIRC, Direct Tax Committee of ICAI, BCA, Chamber of Tax Consultants, other corporate forums and organizations, and is also faculty for corporate houses and IIM. He has delivered around 600 lectures on the topics of income tax and company law. He has been among the first e-filers of the country for TDS returns, income tax returns, and MCA returns introduced in 2006. He has been a regularly contributing to the articles to various study groups and websites, including ICI journals on income tax and company law. He has been a part of core team member of ICI and WRC in handling e-filing help desk of income tax portal and MCA. He has also been a member of study group of corporate law and governance committee of ICA. He has been a special invitee member of Direct Tax Committee of ICI for the year 2018 and study group member of the committee since 2019 and member of Company Law and Governance Committee of ICI for the year 22-23. With this brief introduction, we welcome him. And now I would like to request CA Avinash Ravani sir to take charge of the session.
अनम्यूट अविनाश जी, अनम्यूट करिए.
So,
Thank you, Piyush ji, as Vice Chairman sir, and Vishnu ji and Rana for this wonderful opportunity to speak before this forum once again after a long time. Actually, we had planned 1 month ago to speak on this topic because when we were preparing for this guidance note and we were studying this guidance note, a lot of amendments are there. We had planned that we would bring this meeting before the meeting, and then we actually brought this. So let us not waste this time, and we should discuss it. There are lot many amendments and lot many changes are there. We'll discuss it, what has to be reported in the tax audit report, and we'll start about it. So I think we'll share the screen. Available screen is available now? Okay. So basically, this presentation today is prepared is only for the purpose of discussion, and it should not be taken as a legal representation. So any decision what has to be taken should be studied before taking the requisite application of the act. Please do not share anything from this presentation. It is only for the purpose of for discussion only, and neither the institute nor the direct tax committee is responsible. It is only my views for the purpose of this discussion. So coming to some figures for the assessment year 24-25, last year around 34.84 lakhs audit reports were filed on the income tax portal, of which 34.9 lakhs were tax audit report which were filed on the portal. And if you see that the returns, 34 lakhs returns are the major returns which are major audit reports which are filed are tax audit reports. And many people, tax audit report actually online filing started in the year 2011-2012. Assessment year 2011-2012 was the first year when online filing started. Tax audit actually, if you see, was started in 1984. It was introduced in 1984-85 and was introduced in 84-85 and started filing from 85-86. And from 84-85-86 to 2011-2012. So it took almost after 25 years online filing started. People were facing filing for online filing problems were there. And if you see last year, the data which says that e-filing team got 1.23 lakhs people, 1.23 lakhs queries the taxpayers called up during the month September and October, where calls were received for the queries were received from the taxpayers, where they face the queries for filing the tax audit reports. So comparatively, if you see the almost the filings which were there, only 3% queries were there. So those filings has now become smoother. These are the data from which has been given published by the income tax department. So coming to this, now there are changes in the income tax return. If you see the one and ITR 4 which has been released, utilities have been released by the filing. This year's income tax returns, if you see, it is almost around, when you analyze the report, the income tax return, it is equivalent to the when you see the returns, it seems that income tax returns have almost become asking for the details in such a way that it is income tax returns, so it has become a scrutinized return. Now, what is the people always say that now SSC says that now when you are filing the returns, that you are asking for so much details that is just like you are doing the, as I said, chartered accountant is become an income tax scrutinizer rather than a return filer. So there is a difference between the income tax return and an audit report. So a tax return basically is a document which it is to be filed with the income tax authority, and it is a duty of the filing duty is the responsibility of the SSC. It is not the duty of the income tax of the chartered accountant. This is what is said there. Then the report, basically the reports contains all the key financial details such as income, expenses, and other relevant information, and it has to be submitted in the specific format. Income tax return is also has a specific format. Tax audit also has a specific format, and every eligible person is required to file the return. Eligible person is also defined under the Act, and tax audit report is also defined. Who has to file the tax audit report is also defined under the Income Tax Act. Tax audit report, a specific number of person, a specific person has to file the tax audit report if they are required to file. So in the tax audit report, who has to file the report? A person who is required to file the report, who is eligible to file the report, has to obtain the report, and it has to be certified by an accountant, what the Act says. And it has to be obtained from an accountant, and that has to be in a prescribed format, and that format is prescribed by the department for a particular assessment here. The requirement applies to an SSC who is engaged in a business or a specified profession. Only all professionals are not required to get this accounts audited. Only a specified profession, it is mandatory if the turnover or the gross receipts exceed the specified threshold limit under the tax laws. And that report must be submitted on or before the tax return filing, because there is a specified date. If you have to submit before that specified date, and the details of the tax audit must be disclosed in the tax return. Earlier, we see till 2-3 years back, both dates were coinciding with each other. So you had to file the report and tax audit report and the income tax return both on a specific day, specified day only. The date was set. But 2 to 3 years back, you see the date that has been preponed, tax audit report and income tax report, return filing date, there is a gap of 1 month which has been given. So that once you file the tax audit report, time limit is within 1 month. So till this year, the tax audit report filing date is 30th of September. So whether the extension comes or not, that is separate thing. But due date is 30. As of now, the due date is 30th of September. So by 30th of September, you have to submit the return. And after 1 month, that is 31st of October or 30th of November, whatever the date comes, you have to file the income tax return. That is what the present law which says that. Well, this is the difference between the tax audit report and income tax returns. Coming to this person, then law says that what is the purpose of tax audit? The tax audit purpose is basically, the purpose was that the audit was introduced. The purpose was that to ensure the proper books of accounts and the records are maintained. It should faithfully reflect the true and the correct income. Claims or deductions are claimed because it has a specific clauses where which at the time of assessment, the income tax officer was requiring certain details to verify. So that at the time of assessment, he doesn't, whatever details he gets it, that are certified by a certain qualified person, he certifies him that that auditor has verified, he has given a certificate that I have verified these details, that incomes are correct, these details I verified it. So whatever that details are verified during the course of that assessment, that details he will not verify. He was not supposed to. He will rely on that certificate given by that verified person, and based on that verification, he will rely on that certificate, and that whatever the time which has been saved, he will utilize that time, and he will that allotted the time which has been remained, he will use to find out other details. And the basic purpose here was to get the correct income, true income, which will help the tax administration and to get the correct income and to get the investigational time will be saved and the assessment will get completed. But after the passage of time, it was found that when the time passed, it was seen that the report which were generated were not been accurate, were not to some extent it was found that even if after the reports which were submitted to the assessing officer, they found that there were many mistakes which were found. Based on that, the obligations on the spirit of the audit report was not correct. There was a professional skepticism was there. CAG observed that the reports were not coming correct. So time and again, they started complaining that our purpose is not being solved. Based on that complaint, they used to modify, and then after this complaint, the institute created the tax audit review board. Now we have in the institute the tax audit review board. Based on this tax audit review board is created by the institute, wherein certain audit reports are being selected by the review board, and the review board reviews the audit report, selects the review board, and these audit reports are being reviewed. And then if any mistakes are found by the review board, they are passed on to the disciplinary committee, and that review board and the actions are being taken against such defaulting reports. So this is basically done after the investigations are being run. So this is basically the mistakes which are. Now coming to the provisions of section 44AB. Provisions section 40 says that audit is required to be done if the total sales turnover gross receipts exceeds 1 crore rupees. This is basic provision was there, but again it says that if it exceeds 1 crore, audit is required to be done, but subject to, it says that after, if it exceeds 1 crore, now what is the definition of total sales turnover gross receipts? I will not go discuss in much in detail, because if we have everything defined in our, you can just refer to our guidance note, what is total sales, what is turnover, what is gross receipts. Because if I start discussing everything in detail, it will get the time will not require much more time. So you can refer what is the definition of turnover. Some more important definitions there where changes have happened in the recent 1 or 2 years. I will come to that wherever any some notifications have come or any changes have come, I will come refer to that. Then it says that provided after that, if any aggregate amounts of all amounts of including sales turnover gross receipts during the previous year in cash does not exceed 5% of the said amount, then it says that provided in the case of a person whose aggregate of all the amounts, including the amount received in sales turnover or gross receipts during the previous in cash does not exceed 5% of the amount, and aggregate amount of all payments made in such amount incurred for the expense in cash during the amount does not exceed 5% of the amount. So in this case, it says that if in any case, if your turnover is 10 crores, if it is between up to 10 crore rupees, and if your sales, gross receipts or amount, any receipts or payments is less than 5% in cash, then you will be out of the purview of the tax auditor. Similarly, in case of profession, specified profession, if the gross receipts exceeds 50 lakhs, you are required to get the tax audit done. But if you are opting for a presumptive tax basis, then you are getting the options that you have to declare a certain specified percentage of profit. Then you will come out of that provision that if you don't disclose the profit as a specified percentage of the profit, then you need to get your accounts audited. If you get your accounts audited, then definition of business has been given. Definition of business says that business includes any trade, commerce, or business, manufacture, or adventure, or any concern. And profession means include vocation. Profession is a wide input. So here it says that this is the definition. Now, second question comes whether now since last means whether the data is required to kept permitted in the electronic form. Now all the data is generally physical form has been discontinued. Everybody has started keeping the data in the electronic form, and now even in the last 4 to 5 years, the data has been everybody has started keeping the data on the cloud format, or it is on a virtual mode. So whether that is permitted under the law, whether Income Tax Act permits or not. The law says that information on any other matter shall be in writing or in typewritten or printed form, then notwithstanding anything contained in such law, such requirements shall be to be satisfied in the following manner. So it allows you to keep the data in the electronic form, but it says that it has to be as usable or subsequent reference. Means any time when this data you want, you have to it should be retrievable and accessible and usable, and it has to be the same format as it was made available during the time when it was given for audit. So if it is in that form, then it will be treated as the data is made, data is available, data was made, then it is fine. So as auditor has to ensure that this data is available, and he has to mention that in the audit report that the data is kept in the electronic form. He has to specifically mention in the audit report while auditing in the specification that data is available, data is in the electronic form, it is kept there, and he has to ensure that the proper facility has been for saving or maintenance of data has been kept, that he has to mention it in the audit report. That should not be forgotten. Then now something is that whether now many a times the question comes that the audit is not applicable, and the certain client comes and says that no, I want to get my data audited. I want to get the tax audit done voluntarily. Whether the tax audit can be done voluntarily? No, there is no such provision in the act that the accounts has to be done voluntarily. Section 44AB doesn't allow you to get the audit done voluntarily. But suppose if any client insists that no, I want to get the accounts done, my audit has to be done voluntarily. In that case, what has to be done? So here it says that what is the option available? Then with the guidance note for the special purpose, report on the special purpose comes issued by the ICI will come under the rescue. It says that you can use this guidance note. In that case, you can audit the account and you can verify the books of accounts and issue the independent practitioner's report. Independent practitioner's report, you can issue it. It is a one-page independent practitioner's report, and based on that, for what purpose you have done the audit, that has to be mentioned, and you will be saved financially. You have to sign it. But in that case, you cannot issue. You should not issue Form 3CA and 3CB, 3CA and 3CB, or 3CB or 3CD, because 3CA and 3CB 3CA, 3CB and 3CA, 3CD has to be issued only for the purpose of tax audit, which has to be required to be verified by the income tax department. Here the income tax department doesn't come into the picture because this is done voluntarily and this has to be issued voluntarily. So this case you cannot issue 3CA, 3CB or 3CA, 3CA, 3CD. You have to just issue one page independent practitioner's report, and the purpose of issue of report has to be mentioned in that. You can refer to this guidance note for special purpose, and you can get the account audited and issue this report. And for this purpose also, UDIN report, UDIN has to be generated. Then, suppose if a person has a multiple business or multiple profession or combination of multiple business or profession, then the turnover limits and the gross profit ratio, you have to combine it. You have to see that the audit is per PAN and it is a per PAN. So turnover criteria, the gross receipt criteria, it is per PAN. You have to merge all the data per PAN and you have to do the audit. Secondly, in case of exempt income assets, suppose if there is a trust or a charitable trust wherein the income is exempted, whether they are liable to get their accounts audited? Yes, definitely. A cooperative society carrying on the business may enjoy the deductions under section 80P. A non-resident is there, he is doing the business in India. If they are doing the business in India, but they fall within the tax audit 44AB criteria, if they fall within any of this criteria, then also they are required to get their accounts audited. They are not exempt from this category. Another question came whether a person who is a partner in a firm is getting an interest, remuneration, etc. from a partnership firm, whether they will be liable for the audit. The recent Bombay High Court judgment has this there. It says that when a person, a partner is getting a remuneration or the interest from a partnership firm, he is not doing a business or profession independently, but he is getting only a share. He is getting a part of the remuneration. He is only a partner. So this case law is there. Teresa Joraben Irani versus Principal Commissioner of Income Tax, Mumbai High Court decision is there, delivered on 9th March 2022. In that case, he is getting a remuneration. So in his case, this remuneration, tax audit is not applicable. You can take the help of this judge. This is a flow chart wherein whether the tax audit is applicable or not applicable, you can just refer to this chart. So in case of individual, other than the individual HUF or LLP, if the turnover is more than 10 crores, tax audit will always be applicable. If the turnover is between 1 crore to 10 crores, other than individual or HUF or LLP, if the cash receipts or cash is less than 5%, tax audit will not be applicable. You have to see the cash receipts or gross cash payments. Cash receipts is the aggregate of receipts including capital contribution, all income, sale of assets, loan taken or loan receipts received back, etc. And aggregate payment includes drawing of all expenses, payments, purchase of assets, loan given, etc. Then, if cash receipts or cash payments are more than 5%, tax audit will be applicable. In case of individual, HUF and HUF, LLP is excluded out of this. If turnover is less than 2 crores, then you have to disclose the profit, the presumptive profit at percent or 6%, 8% of the cash receipts, 6% if the transactions are through the normal banking channels, then tax audit will not be applicable. If turnover is between 2 crores to 3 crores, from assessment year 24-25, if cash receipts or cash payments are less than 5% presumptive profit, then tax audit will not be applicable. If turnover is between 3 crores to 10 crores, cash receipts and cash payments less than 5%, no tax audit will not be applicable. Then otherwise tax audit will be applicable. Then in case of a specified professionals, receipts are more than 75 lakhs as per the 44AB, all SSS tax audit will be applicable. Professionals, in case receipts are less than 50 lakhs, then they have to report the profits 50%. Tax audit will be applicable, not applicable. If they are not reporting for profit 50%, then tax audit will be applicable. If profits professional receipts are more than 50 lakhs but up to 75 lakhs, and their cash receipts are less than 5% of the gross receipts, and they are reporting 50% reporting profit less than 50% of the gross profits, then tax audit will be not applicable. Tax audit will not be applicable. If they are not reporting presumptive profit, tax audit will be applicable. The similar line, what we discussed in the earlier slides, aggregate receipt will include law capital contribution, etc. Same will apply in this 44 ADA also. Then coming to what happens, suppose if the business profits are computed in accordance with section, the SS is not required to mandatorily. If the person who is, what are the advantages and disadvantages? Suppose if the person who is opting for 44 ADA, then he is not required to maintain the books of mandatory books of accounts under section 44 AA, and also not to get the then the accounts audited under section 44 ADA. And highest restriction has been put regarding applicability of this section. So 5 years restriction has been put. According to this section, if 44 is not opted for any assessment, then it is to be opted for the next 5 assessment years block period. So he has to opt for the next 5 years. It is mandatory. So 1 year plus next 5 years. So total 6 years he has to opt for it. And once he opts out for any of this in any of this 6 years period, then he cannot opt in again for the next 5 years period. Then after exercising to opt out, again he will have to maintain the books of accounts under section 44 AA and gets the accounts audited under 44 AD. So this has to be taken care. And in case of losses, if it is there, then this will not apply. And these all provisions are applicable in case the income exceeds basic exemption limit. Then in case audit to be conducted, audit in case of non-corporate entities, entire audit is. Now what happens? Suppose if there is a company, corporate assets is there. In corporate assets, what happens? Corporate assets, you have to conduct the audit. So if the audit is conducted, because you already audited the books of accounts. When the audit of account is conducted, so in that case, only Form 3CD has to be filled up, because early audit is conducted, you have to fill up, verify the details what is given in the Form 3CD. So your major part of the audit is done, only part 3CD details has to be verified. But in case of other than the company, other than the non-corporate assets, you have to do the full audit, and full audit after doing this, you have to prepare the reports. Suppose in case what happens? Suppose in case of a corporate audit, if one audit is done, if the company audit is done by any one auditor and the tax audit is done by other auditor. So whether the other auditor the tax auditor can rely on the work which is done by the other auditor, yes, he can rely. SA 600 says that he can rely on the other work which is done by the other auditor, but he can obtain whatever the certifications which are relied. So SA 600, SA 800 and all, he has to take the documentation which is required, accordingly can verify it. If he wants, if he doesn't want to rely on, he can do the full verification also, and he can rely on the work of the other auditors. It depends on the auditor. So correlation of particulars between 3CD and can be done. He will get most of the information which will be readily available with them. Then there are certain changes in the ICAI code of ethics. So whenever there is any change, because it is required, mandated that when you do the audit, tax audit, you have to follow the ICAI code of ethics also. So when there is a change in the auditor, first you have to do is you have to communicate with the previous auditor. When communication of previous auditor has to be by registered AD or in a person. But in some cases, it is there that communication with the previous statutory auditor may not be required. There are some of the instances where it case the previous communication may not be done. The list of items which has been given where the communication is not required to be done. Second thing, if there is a indebtedness more than 1 lakh rupees, if a tax auditor has taken a loan from any company, from the company or from the SSV, which is more than rupees 1 lakh, then he cannot accept the tax audit, he cannot do the tax audit of that person. If he is a relative of that person, then he cannot do the tax audit. Then he cannot accept more than the specified number of tax audit assignment in the aggregate. That is, the specified number of tax audit assignment is 60 now, as per the guidance now. This excludes the assignment under 44 AD, 44 AD, 44 AD. That is the presumptive, that is whatever the limits which comes about on the 44 ADA. It's about a notification number in the guidance note. Then suppose professional reasons for not accepting the appointment. Suppose if you are not accepting any appointment, then you have to give the professional reasons for not accepting the appointment. Non-payment of undisputed audit fees. In case of 6 years, sick unit, the prohibition of above acceptance shall not apply. Then, dispute regarding the fees. Fees are pending due to non-availability of the previous auditor, non-compliance of the previous provisions of section 139 to 140 of the Companies Act, as mentioned in the clause 19(9) of the Chartered Accountants Act, non-payment of undisputed audit fees by the auditees of other than the sick units for carrying on the statutory audit fees, the issuance of the qualified report. These are some of the reasons which can be given, which are accepted for non-acceptance of the tax audit. In first two cases, an auditor who accepts the audit would be guilty of the professional measure. This is that there is non-compliance and non-compliance and dispute regarding the audit fees, non-payment of audit fees. These are the two reasons. Without which, suppose if any audit is accepted, then the professional will be considered as a guilty of professional misconduct and disciplinary actions can be taken. In maximum cases pending with the disciplinary committee is regarding these cases. Then there are changes in the ICAI code of ethics. You might have read in the newspaper. That is what is happening till now. Suppose if there is a chartered accountancy firm and it has 10 partners. So in 10 partners is a chartered accountancy firm. So per partner the limit is for 60 audits. So if a per partner limit is 60 and there are 10 partners, so that one partner is signing 600 tax audit reports. So other 9 partners will not sign any tax audit report. One partner will sign 600 tax audit reports. So now the council has been taking a decision that now each partner will sign only 60 audits only. So this is the decision which is council has been taking up. So basically, what we this is the decision which has been taken up by the council. So if you see, if one person who is signing 600 tax audit report, what kind of quality audit report is would be given? So this is the basic main decision which has been done. So suppose if in many cases it has been seen the person who is having, there are 20 partners in a chartered accountancy firm, and one other 19 partners are not signing any reports, and only one partner is there who is signing 16 to 20, 1,200 reports. So he is just kept as a signing partner only in the partner in the firm. So this was the issue which has been brought to the council, and now the council has taken decision. No, only 60 is limited per partner only, not per firm. So far it was a total firm. Tax audit report forms. Now this forms everybody is aware, that is form 3CA has to be issued. That is the person who is carrying on the business or profession where the account is audited under any law. So where the account is already audited under any law, you have to issue form number 3CA, which is the main report. And along with that, 3CD will be attached, which will be a subsidiary report, which is attachment. So it is form 3CA is a main report, and with that annexure is a form 3CB, and 3CB is a subsidiary report, where 3CB is a report where the audit form is where 3CA is not issued, 3CB is issued. Suppose in case where the audit is not done under any law, then 3CB will apply. Sometimes it may happen the company, the SSC his accounts are required to be audited under any law, but for some or other reasons the audit is not been done under that law, and the tax audit is required to be done. In that case, the report will be issued under Form 3C because the audit is not done under the law. And for that purpose, the guidance, you can refer it to the guidance note. The detailed explanation has been given in the guidance. Form 3CD. Form 3CD is the attachment to the Form 3CA or 3CB. Form 3CB has 44 clauses, wherein each clause there is 44 clauses with 73 sub clauses. So in total, if you see, 117 reporting clauses are there. So in 117 clauses, auditor has to verify and report in. Auditor has to basically this form has to be filled up by the SSC. SSC has to fill up this clause report, fill up this form, fill up these details, and given it to the auditor. Again, given it to auditor has to verify whether these details are true and correct. He has to certify this as true and correct. And where he finds it, the details are true, not true and correct, he has to give his comments. He has to report the comments, and wherever the details are not agreeable, where the details are not where the SSC doesn't agree with the details, or wherever there are different views are there, then both the views has to be commented that this is the SSC's view, this is the auditor's view, and you can add by way of a separate report. And now if you see that when the details are one question has come that there is no point where I can report this in the report. So in that case, if you see, when you fill up the audit report, there's one attachment which comes, that other document you want to attach. Then you can write it on a separate sheet, wherein mention both the things. You can mention the clause number, you can mention the SSC's view, you can mention the auditor's view, and you can stamp it and scan it and upload it. So that is permissible. After the verification issue, the applicable Form 3C and 3CB with documents can be given. Upload the online before the prescribed due date. Before the due date has to be uploaded. This form has to 3CD is generally modified from time to time as per the requirement required by the Act. The last modification has been done on 28th March 2025, and for this purpose we are sitting here to discuss the applicable modification. And it is important to submit the details with accuracy. And till now, if you see on all other audit reports, we have true and fair view everywhere. But only this audit report says that true and correct. So we have to report here the details which are submitted are true and correct. So what happens if this report is not submitted within the time? So with effect from 2011-2012, the penalty is 0.5% of the turnover and 1,50,000. Now some person may say, "Chalo, I am not. The audit fees is, if I don't file the audit report, 1,50,000 is the maximum fee. Auditor is charging more than this one. I will pay 1,50,000 rupees and save from that. It will be beneficial for me." No, this cannot happen because ITO has the power. They can grant order special audit under section 142 2A. So after paying this, if the accounts are not audited, the ITO can order special audit, and generally the auditors, this special audit is being ordered, and special audit, they have a panel of auditors. The audit is ordered in such cases. And there are certain, suppose if there is a delay, there's a delay, then penalty is being levied for, it is considered penalty is being levied. And there are certain cases where there are certain reasonable causes where penalties have not been levied by the high courts. That is resignation of the tax auditor. That is because of, that is some mismatch due to the term of turnover also, death or physical inability of the partner in charge of accounts, labor problems, loss of accounts due to fire, theft. These are basic reasons, because there was search and seizure, natural calamities, resignation of accounting. One of the reasons was that is because of online brutal failure. But in this case, suppose whenever you go to file, there is an online, there is portal failure is there. In that case, you should have a sufficient evidence. So in all these cases, when you have a sufficient evidence, then only you will be able to claim this. Otherwise, it will be a very difficult case. So you have to produce all this evidence at the time when you argue these cases. So whenever you want to, there is a reasonable, there is a delay. You have to see that you have a sufficient evidence with you, that your details are available with you. One such case is that is Sri Saila Mallikarjun was an income tax officer IT appeal, wherein the penalty proceedings was dropped. That's an interesting, very much interesting case. A partnership firm was there which failed to file the audit report electronically, because after marriage on the second day, the person who was handling the accounts, the main partner, got unexpected illness was there. Managing partner was there, and there was certain departure and what happened, the managing partner was there who was managing all the accounts, who was after the marriage he got sick, and the accountant who also left the job, and they were unable to file the report, and it was considered as a reasonable cause for an penalty was dropped. So this is one of the interesting case. So this type of case also happens. Now, applicable format, and this year, if you see that we have the new format of financial statements which has been made applicable, and you have certain changes in financial statements also. So we have seen that when this tax audit review board, when the financial statements come for people have been using the tally formats for issuing the tax audit reports. They issue the attach the printouts which have been taken from tally, and they sign the tally audit tally financial statements and attach to the form 3CD and sign. And somewhere it is also seen that financial statements which are attached to the audit reports which are unsigned statements also, such type of statements are being attached to the reports. See that basically as an auditor, when you certify the accounts, which type of statement should be actually avoided, should not be signed, should not be issued. So government, this year institute has made the guidance note has come for, which has made the applicable format of financial statements. A lot of meetings have happened. So I would just add one thing here, that for this tax audit report, format of financial statement is made applicable. This will be applicable because you are going to certify it. The financial balance sheet, statement of profit and loss, and cash flow statement will be applicable. Notes to the accounts will be applicable when you do the tax audit. So you have to go through this guidance note, notes on financial statements for non-corporate entities, which has been issued, which is mandatory from 1st April 2024. Then in case of companies, we have accounting Ind AS, AS rules. Here we have to see that which accounting standards will be applicable. Then you have to identify large entities, MSMEs, whether it be or SSC which you are going to audit will fall under large entities, MSMEs, and what accounting standards disclosure will form, because you will be auditing either partnership firms, trust, proprietor, IOP, whatever they are. You have to identify whether it will be an MSME, non-MSME, because accounting standards also will be changing. And now one question may come, whether these accounting standards are applicable only to the person who are following mercantile system of accounting and not to the persons who are following cash system of accounting. But if we have a technique, then those who are following cash system of accounting, from them the institute has come up with a guidance, technical guide for preparation of financial statement or cash basis of accounting. You need to go through this and prepare your there's accounting standards. You follow the accounting standards as per the this you need to report, because they have the amended standards for cash basis recommended for this cash basis of accounting. You can go through that and report on that guidelines there and report on that. Then basically we had till last year level 1, level 2, level 3, level 4, but level 3, level 4, level 1 to level 4 are not applicable from this year, because the from last August 2020 this level 1, level 2 for non-corporate has gone. We have only MSME and non-MSME. That is MSME, the classification from 1st April 2024 there is on these lines. Just go through this. That is MSME and non-MSME large entities are not covered by any. Those who don't fall within this category, those who within this category, non-corporate entities from 1st April 2004, those will be MSME will be this category is the those equity those entities whose equity and debts are not listed or are not in the process of listing on any stock exchange, which is not a bank or a financial or insurance company, whose turnover is excluding other income is less than or equal to 250 crores, or whose borrowings are less than or equal to 50 crores, which is not a holding or a subsidiary of any entity or which is not a MSME company. So if we fall within this category, they will be treated as MSME, and based on that, all MSME standards will be applicable. So you have to draft your accounting standards applicability on that lines and report on that lines and prepare your financial statements accordingly. So prepare accordingly. So these are the basic discussion. Coming to the amendments to the tax audit report, the recent changes. So first change is that is about the interest borrowings, salary, bonus and commissions or remuneration. That is first change we have. That is this year section 40B, 40B amendment is there, because now filing the returns also you have to see that salary, bonus, commission prior to financial year 24-25, we had that prior to that first 3 lakhs allowable was 1,50,000. First 3 lakh, 1,50,000 or 90% of the book profit, and balance profit 60%, and which has been increased to now first, if you have first book 6 lakhs the profit book profit, then 3 lakhs will be allowable. 3 lakhs or 90% of the book profit will be allowable, whichever is higher, and now the balance book profit 60% will be allowable. But provided that your partnership deed allows for that, you have to see that the partnership deed allows it. Otherwise, you have to amend your partnership deed, but that amendment has to be prior to 1/4/2024. So while auditing also in this reporting in this clause, you have to see that you report it correctly. So ensure that you verify it and report it properly. So this is the first amendment. While reporting, then amount debited to the profit and loss account being capital, personal or negative, because there are changes which happened last year. That is provision, there is penalty, fines or penalties, that is law being enforced. That is now you have to report the penalty which has been paid outside India. Also, that is all expenses of fine, compounding of offenses has been included last year. Then about offenses, that is any type of perquisites or benefit which you pay to any person, other persons also, which is not connected to your business, in whatever form you pay, either in cash or in kind. That also has to be reported in subclause number 7. So that has to be reported post amendment, prior to amendment. Then 43BH, a detailed explanation that is in is has been expanded now to all the clause number 22. 43BH was introduced in Finance Act 2023, which is that is allowable actual payment. So till last year, you had to report only the amount of interest which was disallowed, and the disallowed 43BH you had to report it. So whatever was disallowed in the previous year may become disallowed. If is paid in current year, that will become allowable. So this year, when you file your tax audit report, you have to see that you take it as an allowable. Those who are using the software may take it automatically this as an allowable. You don't have to worry about it, because but then also, just for your reference purpose, I am discussing it. So allowed on actual payment. So this year you have to verify whether the MS from the MSME Act point of view, so whether that becomes allowable. Whether this is the MSME Act section 15, again there is an amendment. The amendment in the MSME Act. So on or before the filing of return which is paid, Nothing contained in the case furnishing the return of income. So just go through these provisions. I will be sharing this presentation. So trigger point is that it is a micro and small enterprise. Purchase of goods should be manufactured from that supplier. So even if goods which is purchased from purchaser, the purchaser is registered as an MSME unit, but he sells you the traded goods, which is not manufactured by him, then that would not come within that category. You have to take a declaration from them. Then on the date of the supply or supply, it should be registered as a MSME. Due date should be the 45 days from the date of acceptance if the credit is agreed and notified. Either it is there in the invoice or agreement, otherwise it will be 14 days. The biggest exercise. Then if the purchases are made during the year, payment is clear during the year, then no disallowance should be made. If the payment is outstanding at the year end, then verify the due date of the invoice expenses, because this is the biggest challenge while doing the audit and biggest fighting with the SSC. So this is the checklist and the point, and there is no such portal that can give you the identification. That is classification of MSME as per the MSME Act, because in case of corporate SSC you get the MSME 1 filing. Only the outstanding as on 31st of March we have to verify it. For certain persons, whether payment is issued by check or cleared or not, that also has to be seen. Interest on delayed payment to MSME during the year definitely has to be disallowed. Capital goods also has to be considered, and reporting has to be done in the tax audit. So this is basically was there, and now see that prior to 1/4/2025, the classification was that up to micro was considered the investment in 2.50 crores in plant and machinery and 10 crore turnover. Small was 25 to 100 crores and medium 125 to 500 crores. So this may be arguing point with the client. So this may become challenging. Thus, this is for your reference purpose, manufacturing enterprises. Another changes for this year, that is about clause number 12 of Form 3CD has been modified. That is, this year you have 44 BBC, because foreign shipping companies, that is foreign companies, those who are on the cruise business. We are coming up with the detailed guidance note. We come in detail, but this 44 BSBC, that is basically is related to the cruise companies who are doing the business, that is foreign cruise companies, tours and travels cruise business. Suppose if they want to opt for presumptive taxation, and their income is included in the profit and loss account, which falls, they have opted for presumptive taxation. If any such amount is included in the profit and loss, then that has to be reported, because we have 44 AD, 44 AD, 44 BBC was missing. So that has been included over there. So basically 20% of that profit, total collections, will be treated as their income. And whatever they will be getting, that's by way of a rent, etc., that will be exempt, provided the subsidiary and holding companies are same. That is what the provision says. Then 32 AD, 32 AD, 32 AC, 32 AD, 35 AC, 35 CCB, that is clause number 19, because these all provisions are now no longer applicable from this year. So that has been removed from the clause number 19. That is a minor change in the clause. Then about 21, clause number 21, that is section 37. It says that a new clause, added row has been added, wherein it says that any amount which has been paid to settle any dispute, that is to SEBI or Securities Contract Act, that is related to any stock exchange related for related items, then any amount, such amount paid is disallowed, will not be allowable expenditure. And contravention of any law, then that is if provision has been made in any such or any such provision is made basically to central government, any such government expenses which are debited, and some expenses are there when it's actually paid when it's allowed. So that type of expenses has to be reported in that clause. So this is basically the note was notified on 23rd March, the Form 3CD. This is another amendment. The biggest amendment here again is the revision in MSME reporting. That is now you have to report this, a detailed reporting is there in clause number 22 has been added, revised basically. Till last year, the early reporting was that any interest which has been paid. But now here it says that you have to report what is the total amount payable to the MSME parties. So in creditors now you have to see that whatever the outstanding amount is there in the balance sheet, you have to segregate it. What is the amount which is payable to the MSME? So since you are preparing the financial statements as per the financial new, say now everybody will be for preparing the financial statement as per the new financial formats. So they will be getting this amount readily available. So you have to find out the amount. From that, what is paid, the time which is paid within the specified time period, and what is not paid. What is paid, what is not paid. So not paid will be automatically disallowed, because that will be allowable in the subsequent year, and that this amount subsequently will be added in the income tax return also. So this is the revised return. So in case of tax audit, this has to be certified by the auditor, but other than the person who are going to file the return, they also have to keep this information ready, because in that case also they have to report in the income tax return, but they don't have to certify. So this is another revision. Secondly, about buyback of shares. In buyback of shares, what is that? In case of a private limited company, those who have done the buyback of shares, any amount which is received by buyback, then they have to report what is the amount which has been received by collected by buyback, compliances, taxability of this income, the reporting. There is a clause, new clause which has been added. Buyback and the 115 QA, cost of acquisition, target compliance with the taxability of income arising from buyback by the companies. Then about 40A, that is 26 is linked with 34A now. Till 34A, because it is interlinked. 40A, we were in 40A, what reporting was there. That is what is the payment which is made without deduction of tax and what is to be disallowed. The similar type of now it has been added for 40A. That is what is payment made to the non-resident without deduction of tax, where actually tax was required to be deducted. So here we have to go now in detail while reporting. Without deduction of tax, where it was required to be deducted, and what is not there. So now you have to verify each and everything where actually tax was required to be deducted. So here reporting has become a little bit difficult. You have to just verify whether tax was actually required to be deducted. So this reporting is mandated. Then 28 and 29 has been deleted because 5627 and 5627B section is omitted now, so that remote is deleted, clause is deleted now. Then the biggest challenge here is in case of loans and deposits. Till now, till last year, the reporting was that is what is the amount which is received or paid, whether in cash or other than means cash or bank to normal banking channels or otherwise. So now when you will be selecting otherwise, a new pop-up window will open. In that new pop-up window, you will have to select that to give the code. And now till now, you were aggregating the amount and reporting it. But here now they require each and every transactions. It says that amount of each loan or deposit taken or accepted and the code So here you don't have to agree. Now you will have to report each and every transaction. You don't have to, you will not be required to aggregate it. You have to report each and every time. Suppose it from a person, if you have taken a loan 10 times during the year, you have to report the 10 transactions. You don't have to report one. It will be a trend reporting. And that 10 loan, whether the loan is squared up during the year, maximum amounts reporting will become more exhaustive. Similar way, in case of 269 SS, and this, once otherwise if you select, then this 12, from this 12 drop down box, this will, so select the codes: cash payment, cash receipt, payment to non-account paycheck, receipt to non-account paycheck, transfer of asset liability, conversion of asset, conversion of liabilities, journal entry debit, journal entry credit, any other mode. So select from that code. Then in buyback of shares, you have to give these details. That is, a buyback is there, what is the amount which is received, cost of acquisition of the buyback. Coming to this, Chapter 6 say if any deductions. So those SSCs who have opted for old tax regimes, so if they are going to claim any deductions, now if you see in the idea, they are asking for the additional information, additional documentation. So while doing the tax audit also, you have to ensure that they submit you this additional information. So you have to verify this all additional information with the LIC policy, the tenant deductions, etc., loan account number, etc. So these are the related some certain changes. And for additional information, we have so much information from the institute's portal. Any information you have it for FAQs for tax audit, for guidance note, for compliance related tax audit material, for accounting standards, for code of ethics. These are the links which are shared with you. You can just refer to that. Then our direct tax website also has following materials for tax audit. You can refer to that. We have this institute has created AI tools for direct tax. All these tax audit materials are available on the direct tax committees. AI tools are available. You can refer to them. These are free of cost to all the members. You can just log in with your membership number. You just put your membership number, and the OTP will come to your email, your mobile number, and you can use this. You can use these AI tools. It is free of cost. Then the guidance note basically says that when you issue this, when you prepare your form 3CB or 3CA, 3CB and 3CA does not have the mandatory information which is required to be inserted in the when you issue the audit report, because certain mandatory information that is required to be issued. Audit report requires, main audit report requires certain mandatory information as per the institute's SS700 guidance. So it says that as per para 11.9, the following information, it is mandatory that certain information, that whatever the 3CB and 3CD is the main report, 3CB and 3CA is the main report which is required to be issued and signed by the auditor, and 3CD is required to be prepared, and it is the responsibility of the SSC. So here it says that the responsibilities, whatever is the responsibility, has to be specified in the main report. So accordingly, the auditor has to specify in the main audit report. So there the draft has been given that you need to mention it about the same in the audit report. So this para, because in 3CA the auditor is required to mention this in the audit report. So in 3CA, when you issue the report, whether there is a space which has been given, in that you need to insert this draft. And in 3CB, 3C or 3CB, you just are required to insert this draft in this report. Then once you have completed, your 3CD, you have to issue the physical report. Whether physical report is required, issue of physical report is mandatory or uploaded report is mandatory, that is mandatory or not. Because in many cases it is seen that people just take the printout of the issued report and they sign it and give it to the SSC. 3CA, 3CB to be signed by the chartered accountant. 3CA and 3CB has to be, say, there's a main report which has to be signed by the chartered accountant. You can issue the physical report, you can sign the physical report, membership number and is FRN number is mandatory, membership number of the chartered accountant, signing partner is mandatory. Whether 3CD has to be signed by the SSC, 3CD is the main report, 3CD has to be, it is advised because since it is the details which is submitted by the SSC, it has to be signed by the SSC. 3C and 3CC will be 3C and 3CB is to be signed only by the auditor. It should not be never be signed by the SSC. Preferably to put the CA, preferably was CA to put initials and stamp on each page and annexure of the 3CD. An audit report and UDN. You see this to current this year's income tax return. Till last year in the income tax return, only acknowledgement number of the audit report was required to be mentioned. Now UDN number has been made mandatory. So from this year, UDN number will also be required to put in the income tax return. So whether the UDN is to be linked or not, that time will say whether it is because when the tax audit report starts filing and the report starts uploading, whether it is required to file or not. So time will come. You see the details are required now in UDN website also. There are a number of changes which has come. So while preparing, filling up the details for tax audit purpose, the earlier sites details, if you see the form, when you do the audit, you have to select the details properly whether you are doing under which clause. Because this has created a problem. Last many people have reported the complaint that they were not able to link the UDN number properly with they will not be able to link their UDN. So when you do the audit, when you select the audit clause in the tax filing utility, you please select the correct section here and section here and correct section here while filing, and correct section, whatever the proper section you are selecting there in the utility, same section you have to select here in the UDN portal also. And in UDN portal, here also, you can give the portal number in hundreds, thousands, or actual, whatever you feel fit. And you can put your proper comments in the notes. It is not mandatory, but you can put it in mandatory. So these are the changes which are there in the UDN portal. Then final stage, once everything is complete, you can start uploading the tax audit report. So the just one has to be created of the audit report. Balance sheet should be in PDF or zip format, and in balance sheet it should be properly scanned. And it has been seen that in many cases the balance sheet is prepared in such a format that it is not in a readable format. When it comes to for viewing, it is seen that the balance sheets are in such scanned in such a way that third person cannot read it properly. Profit and loss in PDF or zip format, other document. Anything if you want to see, write it. It should be properly scanned, properly written, properly scanned, signed, and whatever you upload it should be signed and scanned it properly and uploaded. Maximum size limits are there for uploading the document. You have to follow that size limit, and UDN generation should be there before uploading the document. And once all these documents are uploaded and it is accepted by the CA, then only it is treated as filing. Unless and until these are not accepted by the CA, it is not treated as file. This completes your uploading the tax audit report. Then suppose if some mistakes happen, whether the tax audit report can be revised. Yes, definitely tax audit can be revised, but there are certain conditions for revision of tax audit reports. It says that tax audit reports can be revised for certain extent because there is any amendment under the law. If there is any mistakes if there is any changes due to such certain sections, then only it can be revised. Then the tax auditor is required to maintain the record for the purpose of the form. So this is the format which has been given and wherein the tax audit records, this number of assignments record has to be maintained. What is the name of the audit assessment year, date of appointment, date of acceptance. So for each year, you have to have a appointment letter and the date of acceptance. So these of a date of appointment, date of acceptance, generally if you see, this is uploaded from the income tax portal. If you see, the SSC adds you as an auditor and you accept as an auditor. So date can be treated as a date of appointment, date of acceptance, that can be treated. But it is better that you have a acceptance letters and a appointment letter. And now, as per the acceptance standards, we should have an engagement letter also. And name of the form on which the member has signed accepted MR, because the person may be a partner in many forms. He may sign the form, he may sign a form, sign the tax audit as an individual, he may sign as a partner, he may sign as a proprietor. And suppose if this he has accepted the audit for the second here of the earlier the auditor was of some other company, the tax audit is been transferred from other auditor. So if there is a communication which has been done with the previous auditor, the date of the previous auditor communication also has to be maintained. So this is basically related to. Then these are the documents to be obtained prior to. These are the documents to be obtained, and these are the documents to be kept for the permanent records for purpose, because those SSCs, those chartered accountants whose forms are selected for peer review, or those are liable for peer review, they will be asked for the documentation purpose. And for them, these are the working papers which are required to be kept for the records. That is, first document to be obtained is when you start your audit. Appointment letter is mandatory. Along with the appointment letter, or audit engagement letter is mandatory. Then once this engagement letter is, once you commence your audit, once you finalize your everything, you start the documentations and sign. These are the signed trial balance, signed financials, and signed tax audit reports. These are the mandatory documents, and these documents should be permanently preserved at least for a period of 7 years. It should be there with your record. NOC and communications of the period, there is a change. Audit program working papers file, draft audit report discussions, audit working file should be there, signed final trial balance with financials, signed financials on all pages, and approved tax audit reports with UDI. Update the audit tax register each year. Any problem related to income tax department, you can approach to these email IDs which are there, is available on income tax. Now, suppose if something happens, whether the can assisting officer summons the tax auditor. So it says that authorized assessing officer can issue the summons or can call for any evidence or documents under section 131 of the act, who has audited the accounts, to give any evidence or produce the document which was there till guidance note 2022. It's a guidance note in guidance note 2022. An accountant who furnishes incorrect information in form 3CA, 3CB, or 3CD can be penalized by the AO or CIT appeals or JCIT. They have the powers which has been granted under section 271 to 71J. And now it says that this penalty is up to 10,000 rupees, and then many persons have been levied penalty. And now chartered accountant can file an appeal against this penalty, levy of this penalty, and can file an appeal against this penalty. And it has been seen that this department has started taking action against many chartered accountants who have submitted, because for minor defaults they have started levying this penalty, and chartered accountants are being penalized for such, and they have started complaining to the institute also for small problems. So be very careful while reporting under reporting. This is just a summary of the entire tax audit tax audit process. What is the management's responsibility? Management's responsibility is to maintain the books of accounts and prepare the financial statements and compile the details and fill in the 3CD of 3CD and submit it to the submit the details in form CCD and submit to the auditor for verification. Auditor's responsibility is to obtain the appointment letter first and engagement letter, verify the details given in form 3CD with the books of accounts, and prepare form 3CA and 3CD and discuss the draft report. Now what happens, suppose if the draft report they don't agree the draft report, then disagreements is there, auditors and SSC to be a disagreement with the, then SSC to be a part of this disagreement should be a part of the tax audit report. Then accounting policies and notes should be certified, and annexed to the tax audit report. Financial statements to be signed, stamped, and filing, and generated using before uploading. All scanned documents uploaded to be either physically signed or digitally signed by the SEC and tax auditor. SD signed documents should not be uploaded. And before commencing any tax audit or for any year, it needs to be seen that all applicable provisions of statutes required for reporting should be properly verified. Study the amendments, or if any doubts are there, our guidance note is always there. Study all the study materials, and if still doubt is that there are opinions of the seniors are always available, you can take the opinion of the seniors. So this is basically related to our tax audit reports and our annual. So whenever you start anything, any related work to the our related to the work with the tax audit, begin with the end in the mind. Accuracy and integrity and completeness, quality and productivity, efficiency and opportunity always will come. Whether it is a tax, whether it is a tax audit, or whether it is a tax audit, CA always will stand as a pillar of the professionalism. And I am thankful everybody, and also my direct tax committee for giving me this opportunity to speak it. And thank you everybody for all the patience for hearing. I think I have completed well in time for the time given to me.
Thank you so much, sir, for this amazing session. Now we will jump on to the question and answers. The first question is from Manoj Raganiji from Mumbai. He wants to ask that what is the applicability of tax audit for a salaried employee who has done huge transactions of intraday speculation trading, but net gain for the year is a few thousand rupees only.
Net gain, no. In that case, see, you refer to our guidance. Our guidance note says that you have to see that speculative transaction is our day-to-day transaction. So day-to-day transaction profit you have to see. So if that profit adds up to 10 crore rupees daily transactions, profit or loss. Loss also you have to treat it as a positive figure, and if it adds up to 10 crore rupees, then it will be audit will be applicable.
Okay, now the other question is from Kamesh R. Shah from Mumbai. He wants to ask, clause 22 of MSME requirements, how do we certify the payments of all MSME dealers of the assessment?
Clause 22, you see, first you have to see whether that person, what you have to do is, as on 31st March, whatever is outstanding, first you take out the list of the whatever is outstanding. And from that outstanding, what is the MSME is there. You find out the whatever is the MSME, and in MSME, you just find out who are the manufacturer and who are the service providers. And from that manufacturing service provider, who are the micro and who are the small. And then who are the micro and from who are the small. In that you identify what is the credit period, 15 days or 40 to 45 days. And from that 45 days and 15 days, whatever is paid in within that specified time. And if that not is paid in specified time, that only you need to disallow.
So we have a one more question regarding
and if you see our guidance note 22, guidance note clause number 22 has a very good example with a classic example giving all these details step by step details everything.
Okay. We also have one question from Megha Shah from Baroda on this clause 22. She wants to ask, what if it is not maintained properly by the enterprise, and what to report in such circumstances?
Means, what if?
What if this MSME data is not properly maintained by the enterprise, and what to report in such circumstances?
If it is not maintained, whether it is a non, say in case of tax audit is there, then you will have to verify all the creditors. You cannot just leave it blank. It is your duty to verify. Then you have to verify all the creditors. First, it is whether they have reported properly or not. That also you need to verify it. It is the duty of the auditor to verify. You cannot leave it blank because this is not you are giving it as a certificate. It is true and correct.
Okay. There is one more question from Mr. Chetanji from Mumbai. He wants to ask that the tax audit limit for professional services is of 75 lakhs for assessment 25-26. What is the limit for private limited into ITES and payment bank ITES services? Will it fall into professional services or no?
Yes.
Okay, it will fall into that.
You just refer to the professional services all and all the definitions are there. It is a list of category which is fall under professional, which falls under fall under business and all. All the list, full list is already available. So please refer to our guidance note in detail, which is where everything is given in detail. Wherever the clause wise it is given, what is coming in the profession, what is given there, what will be applicable, where it will fall, whether it will fall in professional, whether it will fall in business and all, everything is given over there.
Okay, there's one more question from Mr. Anil Kumarji from New Delhi. He wants to ask that if someone earns interest on money lending and that person is a proprietor, will it be considered as a business income and can he opt for filing under section 44AD?
See, money lending is basically money lending. If you unless and until you have a business, unless a license of money lending, it will be considered as a business. Otherwise, it is an income from other sources only. It should be under the income from other sources. It cannot be. It cannot come under 44AD. And 44AD also, if you see, if you want to go for it is 44AD means you cannot just show it as a 6% or 8%. You have to show that it is 6% or 8% and disclose it. It is basically higher of whatever higher of what you show disclose in the books of accounts. 6% or 8% or higher what you show it in the books of account, whichever is higher.
Okay. The other question is from Bhupati ji from Salem. A private limited company having turnover less than 1 crore and not covered under any clauses of section 44AB. Is tax audit applicable for this private limited under third proviso of section 44AB?
No, that is not applicable for private limited company. It is only for no private limited company. It doesn't fall within this.
Okay. There's one more question from Shubham Shah from Pune. If SSC has opted for 44AD for assessment 22-23, but his turnover is exceeding 10 crores in assessment 24-25, and now again he wants to opt for 44AD under for assessment year 25-26, can he opt that?
I think he continues to opt it. It doesn't because of his turnover he is out of that. No, he is actually within that only. It's because of his limit he is out. He should come. He will be within it.
Okay.
He has see basically if you see basically what is the intention is that you have opted out. You have opted out. You have not. You are not in that case when a turnover is exceeded. You are not. You have not come out of your wish. Na? It is because of turnover you have come out of this. So you have not opted out because the turnover didn't allow you to opt in. Na? Control be in that limit.
Okay. Now there's one more question from Sonam Doshiji from Mumbai. In case of LLP, cash withdrawals done by a designated partner for its personal use to be considered for cash payment 5% limit for tax audit of applicability.
Yes, considered.
Okay. There's one question from Jivanatham from Coimbatore. Sir, please discuss on CA maintaining account on cash basis and reported on cash basis. Now, as per ICA guidelines FY 24-25 onwards, non-corporates are required to maintain accounts as per mercantile basis. How this transitional income as on 1/4/24 opening entries are to be made?
You have to suitably modify it accordingly. You have to work it out. Go to the means basically you have to your opening balances will be there. You have to work it out. The compute because you have the closing balances are there. You have to just work out the opening balances going backward. We have to do the backward integration and do the opening balances.
There's one more question from CA Chetan Khuranaji from Shahadara that does incoming auditor has to communicate with previous auditor in case of non-corporate also?
Yes.
So there are many requests asking for a
Yeah, please
so
carry on.
if a company follows. There's one more question from CA Ratanji. If a company follows calendar year for 3CD, then for 3CD report, Form 3CB shall apply.
Yeah.
I think this is okay. Format for financial statements issued by ICI applicable for FY 24-25. There are divergent views that it is only recommendatory and not mandatory. Kindly clarify.
It is mandatory. If it is mandatory. If you don't follow, then disciplinary then actions can be taken against. You refer to this guidance note in that it is stated. When see basically it is the basically what it says that when you certify basically when you issue report, when you issue any report or any certificate, at that time you need to follow that guidance. Guys, see what when chairman gave the initiative speech, at that time whenever the guidance note is issued, guidance note is mandatory. When the guidance note is technical guide is not mandatory. Technical guide is recommendatory. So when you follow the when this now guidance note is given, so guidance till last year the technical guide was there. Now it has become a guidance note. So guidance note is mandatory, so you need to follow. And when you are issuing a certificate or when you are issuing a report, which is certified. So when it is certified and you are issuing a report, then you need to follow the guidance note. And when you don't follow the guidance note, then it becomes a mandatory.
There's one more question. Yeah. What is the meaning of squared up in clause 31?
Squared up means the account becomes zero, closed.
There are one or two questions related to this. Whether the physical report is mandatory if already we have digitally signed. So if we have digitally signed, is the physical report mandatory or it is not?
Generally, see, because people have when you see some details in physical, when you upload the report, details they have limitations characters in the when you upload it. You cannot mention whatever the details which are required to be entered, and when you want to enter certain things you cannot write it in the due to limitations of character, you cannot write it in within the utility. At that time what you people do, people issue the physical reports and then they sign it and then give it. So that physical report is actual report. The utility is for the filing purpose. So there are divergent views. So depend upon the person to person, the person to person. So many people, what they do is they issue the physical report and they use the report utility for filing purposes. So based on the view, based on it is basically this is the physical format of the the physical tax audit report which is there, and the utility is there. There are certain things which are required to be reported in the utility are different. Because utility requires to report you the GST thing is that they want the GST thing to be reported in the utility, but whereas in the physical report it is not required to be mentioned. So there are so it is generally what the people do. Actually, what is written in the act is the actual form is there in the act, and utility in the utility it is utility is just the is not the exact replica of the act. So act what is the in the act is act is the final thing. So it is always advisable that what you give as per the act. So it is recommended that you give the physical format and sign it and give it. It is recommended.
The next question is from Rohit Bhai from Vapi. What if ICBS are not followed, but form is filed as per prevailing AS or the Ind AS? Will the departmental notice be issued for non-compliance of the same, or are there any penalty or rectification chance for the client?
ICDS is mandatory. ICDS is mandatory for persons who are following mercantile system of accounting. So department can take the actions for can take the tax audit report as defective, and necessary action can be taken.
There's one more question. If no interest is provided, contemplated as per contemplated in MSME Act, what sort of treatment is to be given in tax audit report?
See, basically, what it says that in the tax audit report, it says that any interest which is debited to the profit and loss account and which is not allowable, that has to be reported. So it doesn't say that you are required to debit the interest. It is debited, any interest which is debited to the profit and loss and not allowable. If it is not debited, you are not required to report. Finish.
One more question. Can we file last financial year tax audit report now?
A system will be, I think, doubt system is allowed. If it's allowed, you can file it. There is no problem with that. Only is there you can see the penalty may be levied.
There's one more question from Pankaj Bhatia ji from West Delhi. Sir, in case of reporting of expense as a non-deduction of TDS under Section 40A IA, should we mention complete expense in audit report or only 30 percentage part of the same?
40 IA you have to mention 40 IA you have to mention the 30% only.
There's
It is
one
automatic.
question.
It is automatic. Automatic. You mention the amount. It automatic system automatically computes it that much amount. What is the allowable?
Okay. Whether cash basis of accounting is permitted for non-corporates from 24-25 and onwards.
Non-corporate which SSA? It is already the system of accounting is allowed for non-corporate which non-corporate which non-corporate.
The question doesn't signify that. Okay, so we'll skip it.
Non-corporate list is long.
Is obtaining engagement letter in hard copy mandatory?
Soft copy is also copy is mandatory. Soft copy is allowed under the information technology, and our institute also allows it. There is no such thing.
Okay, sir. These are all the questions that were raised. So I think we are done with the webinar. Tushar, are you here?
Yes, sir.
Okay.
Yes. Hello. Yes, sir. I'm here.
Yeah. So will the chairman and vice chairman join for this vote of thanks?
Hello. Can you repeat,
Hello.
sir?
Okay, so I think we have completed the question and answer session. So we will end this webinar here. I would like to thank sir for this amazing webinar, for this amazing session, and patiently answering to all the questions that the participants had. I also would like to thank all the participants for joining, and on behalf of Direct Tax Committee of ICI. Thank you everyone. And I am here on a call from Anand. Thank you everyone.
Thank you.
Thank you,
Thank you.
thank you.
Thank you, sir.
Thank you
Thank you.
so much, sir.
Thank you all. Thank you very much for all the patience hearing, and I think I was able to meet the
Yes,
Yes,
sir.
yes.
Yes.